If you're thinking about buying a home in Lafayette, this might be the most important thing you could watch today. There's a massive issue that's catching buyers off guard, and it could cost you thousands of dollars truly if you're not prepared. In this video, I'm breaking down 6 major truths that buyers must know before signing anything. It's from insurance costs to the doubling premiums overnight to the hidden neighborhood gems that still offer great value. And I'm going to walk you through the tight inventory squeeze, how you can time the purchase right, and which homes could be hiding $50,000 in repairs. So before you fall in love with a listing, let me show you what's really going on behind the scenes in Lafayette's housing market. So number one, let's talk about the insurance crisis. So how much have insurance premiums really increased lately? Well, it really just depends on the homeowner, but I can tell you for a fact that I have heard some people's premiums increasing anywhere from 50 to even 100% from last year, which is absolutely insane. Major insurers have really left the market entirely, and so because of this, there are certain companies that truly have the monopoly. And we know that insurance seems to be a crisis all along the South because of the hurricanes and the different things that have happened. Florida insurance premiums are also extremely high, and so the insurance premiums really are starting to exceed something from $3,000 or more for a standard home. It's very rare now that we start to see anything in those lower price ranges, and some people I've heard are even higher. Coastal areas obviously are always going to be the ones that have the higher rates due to hurricane risk or the fact that you could have maybe surge. There's just not a lot of cushion of land to help the hurricane die as it enters onto land, and so that's why any of these coastal parishes are always going to be at a higher risk rate of when the hurricane actually hits at its strongest because they're close to the coast. So some neighborhoods really are starting to see even 3 times higher premiums than others. So obviously it's something that you have to pay attention to. Louisiana Citizens is a state insurer, which is really the last resort for a lot of people, but the rates are up 63%. So multiple carriers we know have gone bankrupt in recent years just because of all of the crazy high payouts. And so because of this, we're really in dire straits as far as the insurance goes. Experts are saying that the rates will start to get better as long as we don't see an increase in any major hurricanes or storms along the coast this year. We should start to see somewhat of a correction in the market because this has happened before in the past. And so we're really hoping that if storms stay at bay this year, that we might be just okay. Now, let me be completely upfront. The insurance situation in Lafayette right now is unlike anything that we've truly seen. I've had some clients who personally was pre-approved for a home of $300,000, but their monthly payment was increased by just $400 from the insurance premium spike alone. And that really knocked their buying power down, right? Almost $100,000, completely changing really what the neighborhoods they should even consider. Now, here's what you also need to know. Insurance costs, with them being doubled in some cases, some areas seeing premiums anywhere from $2,000, maybe going all the way up to $4,000 annually. It's not just the cost, but that many insurance carriers have pulled out of Louisiana entirely, and they're leaving buyers with just a few options. So if you're not working with someone who knows which areas have the best rates and which insurance companies are really still writing the certain policies, or even a great insurance provider who could give you best rates, well, you could end up with an unpleasant surprise at closing. Make sure you align yourself with someone who understands this. Speaking surprises that could impact your home's purchase, I also want to show you what's really happening with the inventory levels in different price ranges. So number 2, we're going to talk about the inventory squeeze that we see happening right now. How many homes are currently available? Well, active listings are down 30% from last year. So as I go through this data, I'm reading data that is current to date of April. Obviously, we are in the month of May as I film this, but we don't have the stats in just yet for May, of course. So we're going to be talking about the data from year to date up to the April market. So new listings, we've actually seen a change of about 1.9% versus last year. So we are seeing actually less amount of new listings that are hitting the market versus last year. Now, the pending sales, we did see an increase in that. The market was starting to look awake in the springtime, so we did see a 17.9% increase in the fact of pending sales. Closed sales, though, was actually down. So a lot of people entering the market, but not as many closing, where we saw a negative of a 2.7% change over 2024 versus 2025. Now, the days on market is interesting. We've seen a 16.2% increase. We've gone from 74 to 86 days on market being the average. Now, what is is interesting is with all this shaky data, we've seen actually pretty much some steady prices, maybe in some areas decreasing, but we're talking about the entire MLS of the Acadiana area right now. And we've seen 227 as the median sales price, which was increased to 234. That's a 3% increase. And then from last year, we actually had an average sales price of 249.9, and now we're up to 260,000. That's a 4.2% increase in actually the home prices. The months of inventory, which means how long would it take us to burn through the amount of inventory that we have on the market? Well, last year we had 5 months, and now it looks like we're at 4.6. That is a 8% decrease, meaning that the home sales that we're starting to have has actually brought us in the other direction, that we actually have a little bit less inventory than we did before. And that makes sense because we're not seeing as many listings entering the market, but we saw an increase in pending sales. Now, for just talking about the year 2025 on new listings, we're seeing a decrease of 2% total, 2.5% to be exact. Pending sales, we do see about 9% happening just from this year alone. 9% increase is what I should say of actually pending sales. And then closed sales, we're actually just seeing pretty much steady. It's not really changed much. It says it's maybe changed by a point of 9%. So not even complete 1% change. And then of course the days on market, we know that has changed just this year alone. It's actually gone even up to 87 days on market. So that's a 17.6% increase from the beginning of the year to where we are now. And then of course, we're also looking at a 1.7% increase in the prices and 3% in your average sales price that's happening. Now we're hovering around 256,000. So that price correction that I told you that was happening, so it did already happen, and we're seeing that happen now in this year where we were at 260,000 and now we're at 256,000. So just that slight little change in that average sales price. So even though the Lafayette market seems to be facing somewhat of an inventory shortage, we're not really seeing it affecting the prices as much as one would think. So if you're really looking in that $200,000 to maybe $300,000 range, you might be competing with about 80% of buyers that only have access to about 30% of the inventory, which is really what creates that competition for the really desirable homes and can make it a little bit harder for some people. But really, there is truly a sweet spot that many buyers are missing. Homes between that $350,000 to $450,000 range are really the ones that are sitting the longest on the market. Buyers truly have a lot of options. They're able to negotiate with sellers, really get closing costs, maybe even get the price down a little bit and get a few benefits along with the offer. Now that you understand really this inventory situation, let's talk about which neighborhoods still offer real value in today's market. So we're going to talk about number 3, a neighborhood value analysis. We're going to talk about which areas might be overvalued and where buyers can still actually find some deals. Well, we know River Edge prices are up 25% in the last 2 years. Not surprising. It is an extremely desirable area, being more for the luxury market, of course, and not everyone can really afford to be in that area, but it is really its own little city is what it feels like. Very family oriented, and there's just a lot of things that you can do that are really close by, right in the center of town. But Youngsville is also seeing some really fast appreciation that is also happening as well. We're seeing prices rise there, and that's natural, right? With all the building and the developments that you're constantly seeing, there's construction pretty much everywhere, a subdivision popping up, apartment buildings popping up in efficiency style places to live and homes. So we just see so much growth there. It's actually natural to really see some of the prices starting to increase. And then South Lafayette really offers the best value per price of square foot. So really that's where you can find that really sweet spot where you're not in Youngsville or you're not in the most expensive areas, but you can really find some great prices per square foot for some homes, even as you get closer to the Maurice area. So that might be a great area. Also, Upper Lafayette is really showing early signs of gentrification, right? We're seeing some things that they're trying to do to make the areas a little bit better. We're seeing different homes that are being remodeled, maybe homes that are being torn down and newer properties are being built in its place. New subdivisions popping up. So it's not feeling maybe so dilapidated in certain areas, but rather they're trying to make everything a little bit better. Scott is really starting to become increasingly popular. We see a subdivision that's very much like Sugar Mill Pond in Youngsville, and it's really, really beautiful new construction properties, really nice area. The streets have been redone. They're opening shops. There's entertainment. There's restaurants, coffee shops, businesses that are all available right there, and now even an apartment complex, which is really nice. Broussard is also seeing a little bit of a slowdown in its new construction, but the interesting thing is that Broussard is actually continuing to grow. There's so much business and things that are moving to the area. We're really starting to see a boom where it's looking like it might even start to pass up Youngsville, which is very interesting. Downtown is also seeing a lot of renewed interest, which could be a lot of interest to people, especially if you like more of a downtown living type lifestyle. Now, let me share something that might surprise you. Some of Lafayette's most popular neighborhoods are really kind of overvalued right now. River Ranch, while it's beautiful, we're seeing those prices that have gone up 20% over the historical trends. But just 10 minutes away in different other places like Scott or maybe even Austin, we're offering other similar lifestyles where the amenities are quite a bit less, 30% less cost per square foot. So a lot more bang for your buck. And of course, more space. The lots are much more spacious. Homes are not so close together. I recently even have helped a family before relocate to this area, and they found a 2,400 square foot home in Scott for the same price as they would have for an 1,800 square foot home in River Ranch. You get more space. There is obviously other opportunities for different schools. The insurance premium also could be a little bit less. You have less taxes to pay as well, not being within the city limits. So there are some strategic things that you can do in your decision that can really make a huge difference in today's market. So understanding that is truly vital. Now, understanding which neighborhoods is truly crucial, but your timing is even more important right now. Let me show you why. Market timing can really impact a buyer. Should you act now, or is it something that you should wait? Is it a bubble that is about to pop? Well, interest rates are expected to stay above 6%. Right now, they're currently hovering really around that 7%. They said that we can likely see it decrease maybe back to 6.5% as we get closer to the end of the year, but no one really knows. I wish that we could predict these rates because I would be a very rich man, but home prices are still up. We are seeing those increases like I talked about in that data earlier, year over year. The local job market has seen strong growth and continues to remain strong. New employers are moving to the area, new businesses, there are chains that are opening up, but building costs is also up, which is a huge factor on the new construction. We're seeing about 15% from 2023 to now increase in just the cost to be able to build. And we know with the tariffs in place, or if that is actually going to take place because they keep changing it, but that could also really affect building costs dramatically. Rental rates are up. That's about 8% compared versus last year. And then the population growth has been steady at a 1.5% annually. So here's the truth about timing the Lafayette market. Waiting could cost you significantly. While some buyers are hoping for price to drop, our economy is actually still strengthening in the area. And we're seeing major employers move in. We're seeing population growth continue to happen and it remains steady. And then construction costs are of course beginning to go up. Just last week, I had a client who had decided to wait 6 months ago and they were going to see if the rates were going to drop. And now we've seen that the rates have actually gone up. And so now they're still waiting. Rates are still high. And now the prices of the homes are still even rising. So they're really losing now what you could say is about $30,000 of buying power. So the best time to buy is when you find the right house and it's at a price that you can afford. If you try to time the market, it is extremely difficult, regardless of what you're doing in this market. If you try to time it, it's just very, very difficult to do because things change almost daily is what it seems like based on the news, the economy, and what's happening around us. Now, let me share something with you that really could make or break your home purchase in Lafayette, especially if you're getting a mortgage. So let's talk about our point number 5, which is the lending landscape. Let's talk about some financing options that are available, national options, payment assistance. We're going to kind of go through all of those things and see what's beneficial. Now, some local lenders are offering special programs for Lafayette buyers. There are down payment assistance programs. They can offer up to $25,000 as long as they don't run out of money. The good news is every few months, they tend to restock those programs, and so you're able to get that assistance. But remember that those things do have requirements of great credit scores or that you have a certain debt to income ratio, but really they're looking for anything about a 640 and above for those types of programs. So really pay attention to that credit score and try to get it to a prime location. And then some lenders are providing rate buy down options also. So that is also something to keep in mind. Now, VA loans are seeing about 99% approval rating. That is also a good sign. So if you're in maybe a veteran, or you can take advantage of that 100% financing, which is a great option for you. USD loans, of course, are always available outside of the city areas. If you're looking to live somewhere rural and you don't mind just a small commute of maybe 10 to 15 minutes, you can find some great 100% rural development options, which are really great loans as well. FHA limits have increased for 2025. That is also something to keep in mind. So with all of these things happening, you have to keep up with all of the lending options so you know what program is perfect for you. Now, here's something that most agents won't tell you about financing is that local lenders are absolutely crushing the national banks in the terms of closing success. So I would really keep that in mind when you're looking at your pre-approval process or who you're using to help you be able to purchase your home. I had 2 buyers last month with identical qualifications. One was using a national bank and lost 3 contracts because they couldn't close fast enough. And the buyer using our local bank or local lender, the buyer who uses a local mortgage lender on average can close in 21 days with even a better rate and a lot less fees. So keep those things in mind. But here's the real insider tip. There are some special programs specifically for Lafayette buyers that most people may not even know about. One of my recent clients also was able to get down payment assistance from one of these programs, and they didn't even know it existed. So these programs can truly make a difference in you buying, or if you have to wait another year and continue to save up. So knowing these things gives you a lot of power. While financing is crucial, there are other factors that I want you guys to keep in mind, and that is causing some buyers to make expensive mistakes in our market, and that is property condition realities, maybe things that are hidden or that you don't understand, thorough inspections, how important they are, and making repairs on properties. All of these different things are extremely important. Foundation issues, we know, are something that we're starting to see more common in some areas. If you have a lot of trees around, or if it may be in low-lying or swampy type areas, we go through droughts or we go through rains, it can cause the ground to swell or move, which can cause some selling in the property. Foundation issues, I want to warn you, is not the end of the world. A lot of those things are fixable, or sometimes they just cause maybe some cosmetic damage, but the home is still stable and not going to go anywhere. Termite damage is becoming extremely present as well. 30% of older homes have issues with termites. Obviously something you got to keep an eye on. AC systems are averaging anywhere from 8 to 12 years old. That is another thing to keep in mind. Older AC systems in a hot summer can be really difficult, putting strain on those units. So you have to keep up with keeping them in great repair and making sure that they're operating optimally for every single season. And then roof replacements, the cost is up 40%. And that is extremely important because it can affect your rates. Most insurance companies don't even want to insure roofs that are over 12 years old. A lot of them will only insure maybe a portion of them, even if they will write a policy on it. Plumbing issues are really common in homes that are 1980 or older. They may have clay or iron type style of piping that can be easily broken by roots or cause different problems. So not having a sewer scope on these older homes could be detrimental. Electrical issues often can be found in older homes as well. So has the panel been updated? Is it up to standard and code? Are things double tapped? Are there safety measures in place with different switches and things like that? So we want to make sure everything is operating great and how it should, that it's safe for you and your family. Flood zone changes also can affect insurance costs. Obviously, when we had 2016, we had that big flood that happened here, and some people that weren't in flood areas, or maybe they didn't even flood, are now located in different flood zones, which has been really interesting and eye-opening. So now they have to pay for flood insurance for a home that's never even flooded. So those types of things you have to keep in mind. Now, I want to be brutally honest with you about property conditions in Lafayette. We are seeing some serious issues with some buyers if you're not watching out, if you're not using a good inspector. Just last week, I've had a client that was prevented from buying a home that looked perfect, but they found some hidden issues, such as with the foundation, that could have cost them thousands of dollars to fix. And the key is knowing what to look for in different neighborhoods. Homes in older areas, maybe like the Saint Streets or in Broadmoor area, often have a beautiful character, but they need electrical updates, plumbing updates. Different things like asbestos could also be lying, or maybe lead-based paint is also something to be aware of. So newer construction in Youngsville might look perfect, but they could also have maybe some drainage issues that are going on. They could feel a bit stale, that they all kind of look the same because they've all been built in the same era. So I'm saying all this because you need someone who knows these areas specific, the challenges that lie there, before you ever make an offer on a property. Now, if you want to avoid these costly mistakes and get insider knowledge before buying in the Lafayette area, reach out to me directly. I love hearing from you guys. You can contact me always by the number that's here on the screen. You can call or text me. I will respond, and I would love to get to know exactly what you're looking for. If you want to know exactly which Lafayette neighborhoods offer the best value right now, well, click on my next video where I break down the top 5 most affordable neighborhoods for your money in 2025.